up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump, I won't forget. Buy high, die huddling. The gen brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. Almost gone, greed's the king. This crypto dream's a punk rock thing. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die huddling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rights. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I'll reload, I play to win. Even if I lose it all again.
Good afternoon, good morning, guys. How's it going? We have in the chat, we got the first commenter, Max. What's up, man? Maxwell. We got Vexker, Coma, Wagner. How you doing, man? Pluff, Steerling. How you doing, Steerling? Keen Bean, Tonky Honks. Andrew, how you doing, bro? How's the Hobbit doing? All right. So, we had a really boring weekend. Anyone who was trading over the weekend was a little bit brave. Unless it was alts, there probably was some activity there. But yeah, over the weekend we had this like less than 1% consolidation. This is such a tight range. Like there's nothing you could really do with that unless you were being brave with the spot buys and spot sells. But yeah, we ended up, I was preparing for a long opportunity down here. Maybe that this could curl over and give us a SFP or sweep off the previous value area low. We dipped into this like 55-day previous value area here, but we never got the full rotation past its point of control, like the strongest area of interest within that area, within that value area. If I zoom out, I could show you where it came from. Is this consolidation right here above this macro value area. But yeah, we just bounced off of its point of control, and now we got back above that value area. And now we have an opportunity here for resistance, unfortunately. So we have this uptrending momentum from $16,000. Like this has been holding us up since the start of the bull market, right? Or at least, what we consider the start of the bull market. Everyone else considered the start when we were way up here. But if we go over to the active price action, we can see that we have a 6-hour order block that we just mitigated from this candle here to here, like this doji, and this impulse move down, created a 6-hour order block, and we just finished mitigating it. And actually, we just recently created a new one down below us. So if we come back down for a retest of these highs, then we have that 6-hour order block confluence for a bounce, and that could allow us to stay within this value area that we're just starting to get acceptance into, like right now. But yeah, we got to be mindful of the confluence of the roof of the ceiling of the 6-hour order block is in confluence with the previous point of control of this range, and we have the uptrending momentum there as well. So as you got 4 forms of confluence here that could cause us to hit our head and come back down, rotate at least to the value area low, or maybe this 6-hour order block. So what we could do is we can get a rectangle tool out and just draw a box over our order block, just so we're aware of it in multiple time frames. And we can zoom in on the 15-minute. You can see it a little more clearly. Right? So basically what I'm preparing for, because I'm not in a trade right now, I'm just looking for that potential bearish rejection. Maybe we get a high sweep of this liquidity here, get an SFP from it, give us a change of character, and then rotate down to that order block. Or maybe the previous value area low in confluence with the VWAP could be enough to induce a bounce as well. Now if we close above that point of control, that's a different story. If we close above the point of control, then we can expect the full rotation to the value area high. And so that would say if you're in an existing trade, this would tell you to stay in the trade. This wouldn't be something that I would take a new trade on personally. But yeah, we get that rotation to the top. We know that already that there's a lot of liquidity resting up here from when we started this drop. About $400 million was added to a pool of liquidity in this area, and we have confluence of the 50-day EMA being with that area as well. So if we do make it that high, I would definitely be preparing for a short here with the confluence of that liquidity being used as exit liquidity, the 50-day EMA being at the top of a previous value area high, and then just waiting for the structural evidence of that resistance through a bearish change of character. So this is a great spot to prepare for a potential short. So I'm going to put this here just so you guys are visually aware. If you're using my charts, this is where we're preparing for a potential short position. And back down here, we could potentially prepare for a long if we find evidence of support here. But this has been basically fully mitigated. You can go into this, do something like this if you want, but realistically, we have the point of control there. We have all the information that we need to kind of like basically prepare for a rejection. But yeah, these are my like 2 key zones that I'm going to be watching for potential long or potential short. It'll likely just be a scalp short. This could become a potential swing long depending on how price action performs against the 50-day EMA if we get here first before getting here. Congrats to anyone who might have taken the long down here. We did have like a decent confluence. The main thing that kept me out was the fact that, it's weekend. I want to spend, all my focus on the family. But we broke downtrending momentum here. We retested these previous highs. We got that break of structure kind of behavior that we kind of look for when we're retesting a key level. So that was a good inducement of a potential long. A lot of people were targeting around 110K during this moment, but it was right into supply, so that kind of kept me out, as well as focusing on the fam jam. We got to the top supply, pulled back, but we never actually broke that low, that strong low. So it was this could have been a decent run up. But that's Bitcoin. That's what I'm preparing for. It's nice to see some movement back up. I was kind of worried about acceptance into 101, this macro valley area here. Like that would have been nuts. But we held up. How you guys doing? You took the SFP short yesterday, Coma? Yeah, there's a couple opportunities for something like that. Hopefully it was a winning trade. The SFP that I see from yesterday is this one, but it didn't look like it worked out. There's a sweep here you could have taken that was decent for a move down to this local demand. You did it from 109, eh? Oh, good job. Okay. Then that's the good one that you wanted to take. You would have been nervous for a moment after the SFP unless you got in during the up climb. You got the double top, that's sending. You had descending double top, and that brought us down to the local demand right here. Or you could have held it just to the SFP target, which would have been roughly around here. Good job, man. It's evening here. Good morning for the US chaps. Good evening, Jazz. Okay, so that is Bitcoin. What assets would you guys like to look at from here? We can look at some alts. We can look at gold and how it's been doing a crazy tear to the upside. It had a weird consolidative phase too, but it makes more sense from something like gold compared to Bitcoin. Really tight consolidation. Got a bit of a whipsaw event, and then we ended up breaking the horizontal resistance, and it came up running. Now it's mitigating some order blocks. Got another break of structure. It's coming up towards these highs. So we might see it come into this supply concern. You get a bearish change character there in confluence with what's going on with Bitcoin. I haven't actually looked at any short-term confluence alongside gold in a long time. I like to look at the macro confluences with gold and how it could induce Bitcoin's potential Bitcoin behavior. But yeah, gold's been on a tear lately. It just hit a recent target from a local bull pennant at 4,300 and exceeded past a little bit to 4,400. And now we're kind of getting this weird, horizontal resistance with this double bottom structure, this ascending double bottom, and the measurable target's already been hit. So this is an area we compare for potential resistance or a break of this high, retest, and higher high. You get that break of structure, we can end up seeing continuations from there. There's some weird, shady rumors too that the U.S. might be trying to use gold as a tool for a reset. You gotta do more research on that. But that'd be intense. I think that'll require like gold to get to around like 15,000 in order for that to be possible. Let's go back to Bitcoin here. One thing you could also kind of prepare for is potential SFP from this high. I don't like the confluences around this area for an SFP from here. But you could have it just come and give you a short scalp trade. But this is not an area where I expect a continuation for your target, like a target extension or anything like that. Just the positioning is a little bit weird. Gold touched a $30 trillion market cap. Jeez. That's nuts. 7 trillion to go. Just kidding. I think, they don't own as much gold that they had before in the past, so they would need it to go much higher than $37 trillion market cap for them to do a reset. Litecoin. Okay, Gabriel's casting invites here. Requests. We got requests to look at Litecoin, GLD, TNYA, Gear, request on Render and HBAR. Okay, Gear asked first, so we'll take a look at Render and HBAR quick. See how it's been doing. HBAR, Render. We do have, we have a chart for each. Let's pull this up. Last time we looked at Render was the 17th of October. We were looking at the time, geez, how far did it go? 42 cents. There was this valley area that render's been consolidating in for a while now, but 248 days, 250 days roughly. We came down, had it act as resistance. So the neckline to a double bottom right now comes with the confluence of breaking into this valley area again, which is, they usually give you really good setups when stuff like that occurs. When you see double bottom, when you see a bit of a deviation from a valley area, like we have right here, and you have reversal structure against the valley area low. This is a really good example right here when we have this ascending double bottom neckline right here and we broke into it, and then you can prepare for a potential rotation to the opposite side of the valley area right here, right? So the same kind of concept of what you'd want to prepare for over here is looking for acceptance into the valley area from a break of this neckline. You'd kind of want to front run this particular double bottom because of how like steep the neckline is away from the current price action. So if you find yourself a front run opportunity, kind of like what we had mapped out here for a potential SFP, which we never really got. So you find a front run opportunity, then you can hold your trade a lot more easily if you see that break of structure acceptance into the valley area from a break of this neckline. So you have the confluence of the momentum from the double bottom giving you buy pressure, acceptance to the valley area to give you a good target extension to the valley area high. So let's see what kind of measurable target we get. If we just got the conservative target, yeah, it brings us a little bit past the point of control, but we got to be really mindful of the point of control along the way. We have some wicks here, so we have some suggestive order flow suggesting that there could be liquidity resting here and confluence with the downtrending momentum and the point of control. So if we do make our way up there, just gotta be mindful of these potential barriers that could prevent us from going any higher. So if you see any opposing changes of character, depending on where your entry is, you gotta be fearful that can come down and like knock you out. But if your entry is low, then you can use stuff like the valley area low or this previous high here as a guard for your capital, right? So we can zoom in now. We're on the 6-hour time frame. Zoom in on like the hourly for render. We just mitigated like local supply, kind of similar to what we had happen with Bitcoin when we broke its resistance, mitigated supply, pulled back a little bit, never broke our strong low. And then just made our way up. Now, right now, we're fighting against this previous low. So kind of similar to how Bitcoin's postured for a potential reversal with this double top kind of formation building. If we break this neckline and we see it act as resistance, then we can see it come back down to that 6-hour order block, and render's confluence alongside that. It would be the retest of this. It's building a little bit of like a double top posture as well if you zoom in. A little more flaggy, but we do have a neckline here that if broken, we see it as act as resistance, we can have that rotation down to this local demand right here. We can delete this noise. We can change the opacity of this so it's easier for you guys to see. But we have a little internal area of interest right here that you can watch out for. And we have our neckline basically being aligned with this previous high. So if broken, we'd have the confluence of breaking past this previous high to help induce sellers to bring it down to our area of interest here. So I'd watch this area like a little hawk, $2.58 of 258.9, sorry. That breaks with the full body candle close, 2 candle pullback, lower low. Then you can expect that rotation down. That's render. Right now it's on its way up to the valley area high. So until we have that evidence of reversal, we should assume that's just going to keep going up towards at least the valley area high. And this is where I would prepare for potential resistance internally. But if we keep climbing, and we break past this neckline, then we can prepare for that double bottom target. But yeah, this is a regression trend within the double bottom right here. And these usually break. The technical target is in confluence with that double bottom kind of neckline posture. This render, H bar, I believe it's kind of similar in posture. It's just like the only main difference is the age of the value area that it's trying to likely try to get acceptance within is a lot younger. Okay, we already had, last time we were looking at this SFP for a long, and then we end up getting the break of that high too. Consolidated for a bit, and then broke past this momentum. After mitigating this supply, pull back, retest, got the higher high, so that break of structure signaled a continuation, like a trend-based move, and a shift of the active trend. So this is H bar's posture. It looks very similar to renders, except H bar gave people a much better entry opportunity down here than render did, because we never got the sweep that we were kind of hoping for with render that we did get from H bar, right? So this is the hourly time frame. Same thing though, like we're trying to get this neckline has a little bit of distance away from the valley area. But let me just readjust this valley area. We don't have all the data. And I can get rid of the noise here. I got that market structure indicator is kind of loud right now. There we go. Along with everything else on my chart. So we can update this fixed range volume profile pull until the moment we lost the valley area here. So this gives us better data to prepare for acceptance into the valley area if this double bottom works out. We have, yeah, our previous valley low being at 21,419. We can delete this. That's the last long we're looking at. We can leave this here. That's still important. The same kind of behavior, but we are deviated a little bit further away from the valley area. That's the main difference. So when we break this, or if we break this neckline like we're preparing for with render, we're not going to have that immediate kind of acceptance into the valley area until we get way up there. So we have to actually prepare for this to act as resistance as soon as we enter. So if I were to pick and choose between what kind of scenario that I would prefer to take, I would pick the render scenario if I was late to the party and wasn't already an existing long. Like this would be the better one to jump in on, because you would have less barriers to worry about and have more confluences with your entry. Yeah, because we have supply right at that value area low. If you just pull a rectangle against this impulse move down, consolidative structure, another impulse move down, so there could be residual orders there. And we delete this. There we go. And send this to back. So if I get a horizontal ray here, the pathing that I prepare for is potentially this. Just gotta watch out for that scenario. I would prefer if we got a decent pullback after testing this area and then a break above, so we can use that pullback as a stop loss guard for the trade rather than having one after a retest and eating some of our R&R to that barrier concern. Because if we end up getting past this, then awesome, right? But we have to manage our risk according to the immediate threat, instead of just assuming that we'll break past that threat and continue towards like the valley area high, for example. So yeah, this is the preferred scenario before jumping in. If you got in on the SFP, because I believe that was during, oh no, that's Friday. Okay. It wasn't during a live, but, oh no, it might have been. Yeah, it might have been during a live, last Friday's live. But if you got in here, then yeah, use this as an edge in knowing that if we, see resistance here, an opposing change of character starts coming against you, then yeah, you could take some off the table. But if we break past it and get that break of structure instead, then you can use that as a tool to hold your trade if you're still in on that. Cool, that's H bar. Can we look at BAS. Yep, we can do that too. Okay, Litecoin was the next request from Gabriel. Let's see how Litecoin's doing. All right. Ooh, bit of a whipsaw. Okay, well, we're kind of expecting... I guess I haven't looked at Litecoin since the major crash, but this is where you would expect a major crash from Litecoin. So if we zoom out on the bigger picture, if we go to the daily here, like this is where I have this line here on my chart, not just to mark like previous support and resistance, but it's also like a level where a large majority of Litecoin holders from the previous cycle pump are at their average, right? This is roughly where most people's averages are. So we've been using it as resistance as people have just been exiting, like retail has been exiting the moment they are at break even. So I was hoping that this time around, I remember talking about it, that this time around would be the time we actually finally break to the upside and start targeting this, rotating to this value area high at $2.20, $219. But we got a SFP, it looks like, instead, and generated a nasty daily order block simultaneously. But that would have been a great trade. Hopefully maybe there's an SFP in a lower time frame. Yeah, you could use like the 4 hour for sure. All right, going to the hourly. This posture is a little unique. Let's see. Yeah, it had that awkward consolidation as well, but it had a bit of a curve to it. So it looks like, based on the order flow, that there would be more liquidity below Litecoin than a majority of assets based on their behavior. So like looking at this, I see this as like a liquidity curve. If we get let's say we got the bearish change of character around here, I'd be targeting the bottom of this liquidity curve in confluence with that hourly order block, right? And you have a previous value area low here as well. So let's see, for the draw pathing and how it prepare. So here's our curve here. Let's get rid of these arrows. If we get the higher high is what we'll need in order to make this the strong low on the hourly. But if we get that generated strong low and we break this area, then we'll have a change of character. And then I'll be targeting, basically this 1 hour order block. Send it back. And the main concern would be here along the way. These strong area of interest right here. And you have these liquidity here that could induce a reversal. So we just got to prepare for a potential bounce here. If you have like an opposing change of character here, maybe take some off the table. Depends on what your R&R is. You don't want to make your net R&R at the end of the month too poor by closing too much too soon. But yeah, overall, targeting here, preparing for a reversal. If that were to occur, like we're coming in right now into a supply concern right here. So, and we got this gold line here, and I don't usually put these thick gold lines unless it's a key area of interest. So if we're coming up to a strong area of interest in confluence with a supply zone, then there's good reason for a potential short-term reversal. Just prepare for that. And that would work well in confluence with Bitcoin, potentially double topping here. So assuming that Bitcoin's the boss of Litecoin big time, there's a lot of pairing liquidity with Bitcoin and Litecoin. So where Bitcoin goes, short term, Litecoin tends to follow. We do have an hourly order block here as well between $100 even and 98.05. So just prepare for structural evidence of resistance there too if we do continue to go up. But this is the safest play that I can see so far. Where did its wick go down to? It went down to 52.71. So it held above its legacy support. The legacy support of Litecoin is insanely important. It's this red line right here. Like the equivalent to Bitcoin's legacy level, like Bitcoin's legacy level right now is around like $30,000, I believe. I got to double check that. But if you zoom out on the daily for Litecoin, this one has been holding it up since it was at $22 in 2018. So this is like a 7 or 8 year trend line holding up the price. Like Matic or Polygon recently lost this, and when it lost this, that's when I boycotted Matic. Like these are really, I find these are really important to me to know like where the floor of an asset is, and if they make some changes to their branding or their tokenomics to the point where it kind of like corrupts that, then I usually don't touch that asset again. So if we do have continuations with Bitcoin and alts, then this is where I expect the floor to be for Litecoin. So if you ever have an opportunity to buy Litecoin around $74, I would recommend taking it, especially if you have the structural evidence of support with like a double bottom or inverse head and shoulders or Wyckoff kind of behavior. Okay, so that is the short term for Litecoin. I hope that helps you out. But that's a play that I would prepare for. And if it doesn't happen, then great. If you're holding Litecoin, then your bags will keep going up. Okay. What's next? Don't forget to screenshot your chart. Oh yeah, you guys suggested that in the last live. So every time I find a play, screenshot it. I can throw it in the Trade Talk channel. But all these are technically available under a command too, by the way, just exclamation point charts. Litecoin. There we go. So that's Litecoin. Okay. All right, what's next? GLD. Okay, GLD. I don't think I've ever tried GLD. I got GLM popping up. It might not be available on TradingView. Let's see what TNYA is. TNYA. Yeah, same here. Might be decentralized only right now. Auction from TNB Willa. Let's see, auction. I think we've done TA on auction before. Pulled up on Binance. Let's go to the daily first. Okay, so this thing's been on a forever downtrend. Let's see. At least since it's been populated on TradingView. We got this momentum level here. We did breach it for a moment from a squeeze, grabbing all the short liquidity. I'm going to grab rectangle here, just put it on the daily order block. We got buyer's momentum here. So we're kind of like inside this regression trend where we had a moment where we grabbed all liquidity from this point forward and back. So now we kind of got most of our liquidity from the upside is just from this, right? And likely some up here. So we don't have like the beautiful picture that we had before. Normally when you see regression trends like this is the stuff that you prepare for, right? And now that it's already happened, the next move might not be as strong. So just be aware of that. Like that was a crazy move of like 274%. Now I don't know what the supply is of this asset, but normally for a move to occur like this, it normally requires like a supply on the low side, like what the amount of tokens were created basically. We just mitigated a daily order block after testing the 200-day EMA, or just prior to testing the 200-day EMA. So we could see some confluence of a reversal, especially when you have an aggressive move up like this, similar to what we see with every asset. Whenever you see a large aggressive move up, we normally retrace a large majority of that move because of the imbalancement that it creates in the market. All the think about the order books and how they just got wiped clean, and all the new buy orders that are coming in slowly. They usually don't come in fast enough. Oh, we have really clean structure on the 15-minute on auction, so it's gonna be a fairly predictable drop once we get that structure. So now we're getting squeezed between the 50-day EMA and the 200-day EMA. So we got to look at this area of interest here, this demand zone, as an area of strength with the confluence of the 50-day EMA. So if we come down there, we've got to prepare for a reversal off of this level. And we could start seeing it ping pong between the 50-day and the 200. I personally hate stuff like this. Unless the gap is decent. Like this is okay percentage-wise. Hopefully we have the structure that'll also be tight enough to allow us to get us a good R&R setup. So here, if we never really truly had a proper pullback in the 15-minute at all throughout this journey up. So our strong low was technically down here. So we have reason to come down here and still be bullish on the 15. So we have to like rotate. This forces you to rotate to lower time frames like the 5-minute in order for you to find a good enough structure to take the short. So right now, I'd be looking at a fib pull, honestly, from the high to this low. Let me just adjust this. We just finished mitigate a 15-minute order block. Our 200-day EMA is right here. Pretty much flush with the 786. So we can watch out for a 786 golden pocket level here for a potential reversal. So this could be the moment that you look for if you're trying to short into this key area. But a lot of barriers along the way. Just get where's my, there it is. So we need a bearish change of character here on the 5. Hopefully during that time, we have the timing of losing the momentum around here, depending on how it wants to drag its feet along the way. Based on the current pace, I think it will happen sooner rather than later. But if you take the short, you're going to have to watch out for the confluence of these lows, where there's likely liquidity resting down here, and confluence with the VWAP that could also induce a reversal. So this would be your potentially your TP1 or like your barrier concern that you watch out for first, where you're going to have to start doing some babysitting. Babysitting basically meaning like if you see the pose and change of character, you take some profits. If you see the break of structure continuation, you stay in, right? Those are your babysitting moments around those key levels. It helps you decide whether or not you hold your trade for more gains or you look for evidence to get out. I'll just mark this as local support. All right. But this is definitely a good spot to prepare for longs if you're not comfortable with any shorts. All right, that's auction. I hope that helps you out. Let's go back to Bitcoin. Oh, well, maybe we should go back to the auction chart for a second. Zoom in on that. And get the screenshot for you guys. There we go. Okay, Santos from Max. Let's see what's Santos. Go on Binance for that. And lots of gaps in the candles, so be careful of liquidity on Binance. Whenever you see stuff like this, these kind of gaps, just expect poor liquidity, slippage. You know, you could enter here, for example, but your entry could pop up around here if there's crappy slippage, right? I don't like this chart. I do like the structure, like the fact that we got this falling wedge posture going on here. We've retested. We got a higher high, but we haven't broken our strong low yet. So basically, we're kind of on this journey to the technical target, which is right here on Santos. 144, pretty much on the dot, is the technical target. We have the... we do have an order block, just a small 5-minute order block here. You gotta be cautious of along the way. But overall, yeah, your technical target is right here. And we got the inverse head and shoulders posture leading into the break, which is good confluence as well. So this is your key level. If you're looking for a stop loss guard, or if you want to make sure you're getting on a position of strength, because trying to enter now below the VWAP is a little bit high risk, especially with everything that we're kind of looking positioned for a drop, right? This is your kind of your R&R. But I'll be careful trading on Santos on Binance right now with these candles looking the way they are. There could be a lot of slippage to worry about. So make sure you're picking an exchange that doesn't have all these crazy gaps. Santos. Okay, going back to Bitcoin. See how it's doing. Yeah, the 5-minute, you can see that creeping up. We could just pull a fixed range here to help us. You have break of momentum, acceptance to the valley area, expect rotation down to here. This awkward 5-minute structure though. Teo, Zcash, AVAX, CRO, and Uni. Okay, so we got, let's take a look at AVAX actually. It's either AVAX or Atom that almost hit $0 from the crash. I don't think it was AVAX, but where'd you go? It went to 852. Wild. A lot of noise on this chart. Sorry, guys. Give you guys the setups, but then I don't clean the charts after they're done. Double bottoms over. Big supply here. Man, it's got some relative weakness. Sure. All right, so lots of confidence for shorts if we ever get back up there at 2764. Kind of got like this descending kind of double bottom posture with the full body candles. We could be building a regression trend. And we did break the internal momentum here, retested, got the higher high. If you go to the hourly, the picture's a lot more clear. We are at local supply right now. Pretty much mitigated the whole thing. But yeah, basically we're retesting these previous lows, the supply barrier, previous point of control. Got a little bit of a curve. So the buyer's momentum is kind of picking up a bit, but it's our current momentum here. Could look for a bearish SFP from this high. I think I got my Argus indicator on. Got, yeah, Argus is on. I'll turn that off. Argus is basically an indicator that allows you to see wicks from other exchanges all in one chart. So it's kind of helpful if you're doing SFP trades and you're watching like high liquidity exchanges like Bybit and stuff like that, but you're charting on something like Binance. Okay, so yeah, we could look for a sweep of this high and confluence with the point of control and sweeping this high. So get like a double SFP scenario. Those are great because you're grabbing local liquidity and you're grabbing like legacy liquidity from previous price action. So you normally get a decent reaction off of those kind of scenarios. And they're not that uncommon, but it's always tough to sometimes be on the charts during the moment it happens. So make sure you set your alarm. I would normally set an alarm near the full body structure, so that way I'm notified before it gets there that an SFP could be occurring here soon. So I think this is a great setup, potentially coming up here. If we get that curve, come back up, sweep that, and then just target the low that is generated. If we have like a pullback here, for example, then we sweep it. Just target that low of that pullback. If you're new to SFPs, we do have like a very detailed course about it that's included in your membership. So if you're a member, yeah, just make sure you go through that. If you want a little bit of information about it, but you're not a member, you can always type !SFP, and then you'll get a little tutorial on it. Okay, cool. So that's what I'd be mainly looking at, is just the SFP from there for AVAX. Otherwise, it's kind of giving us the same kind of vibes as everything else. It could be trying to make it sway slowly up to here. And then we could still get that SFP opportunity and still, come up afterwards. A loss of this momentum, it could give us a rotation back down to 1949. So just prepare for that scenario too. If you get that bearish change of character, especially for around this area. If it were to happen, it would likely happen around here. Let's see. Just want to zoom out a little bit too, see what the macro situation is. So we do have like this valley area here. The point of control of this valley area is where our neckline is. Let me just update this data to the moment that we left right here. If we leave when we have that pull back, break a structure, higher high. The data didn't really get changed that much. We got like a little bit of a higher valley area low. But yeah, if we break this neckline right here, then if you're in an active long position, then you could use that information to tell you that we're going to have a target extension likely to at least the value area high. We might have proper acceptance into the value area by then. All right, cool. So that is AVAX. Out of all the wick structures that we saw for potential SFPs, this is the best SFP opportunity that we've got since we started looking at charts today during this session. Litecoin, though, I think is my favorite setup out of the ones that we looked at. So if we confirm Bitcoin's going to come down at any point, and then Litecoin confirms the break of this low, I will be trading Litecoin over Bitcoin. So these two, yeah, Litecoin and AVAX are my two favorite setups. But Bitcoin's going to dictate what happens, right? So if we get the continuation instead, then we're going to go up. Here's the SFP that we could get on Bitcoin. So let's see what happens. We got 2 minutes left on the 5-minute candle. Could get a 5-minute SFP. And the low that I would target is here. Even though it's not the technical is here. It all depends on whether or not we even get the SFP. 1 minute and 42 seconds left. Good afternoon, Petro. How you doing, man? Zaid, how you doing, bro? I appreciate the value that you're dropping in the welcome chat there, Zaid. Keeping us informed of all the news and stuff. Yeah, I've heard about this today. API errors. Okay, well that probably explains what happened to us. We had an issue with our Teachable updating their APIs and they didn't notify us, so every member was kicked out because our system thought that no one was a member. And then we got it all fixed pretty quickly, and then yeah, everyone's got their roles back now. So we got 5-minute SFP. That's likely going to confirm. Stop loss. Your invalidation point for an SFP is the wick itself. So you can put it right above the wick. If you're concerned about sweeps, you get your Fibonacci tool from the wick to the body once it closes. And you can set up your Fibonacci tool to give you a 50% retracement level to reduce your chances of being swept by close to 25%. But this, you sacrifice your R&R doing stuff like that. You gotta make sure you have a proper R&R. All right, the SFP is gonna confirm in 5, 4, 3, 2, 1, 0. All right. So if you don't like the R&R with an SFP, what you can do is you can try to enter between the entry point, which is here, and the invalidation point, which is here. It looks like it's going to come straight down. We're at the value area high now. This is where you expect some support. So a bit of a bounce. So this is kind of the moment that you'd wait. This is the moment where it helps induce patience for people who are trying to enter with proper R&R. We could get the bounce here. But if you don't, then you don't get the trade, right? Yeah, Litecoin's starting to come down. AVAX isn't moving. Render isn't moving. Get some divergence on H bar, some bearish divergence. Let's see if we break this momentum. So yeah, the second opportunity is around here. But this is the technical target. If we're going with the technical target, we got our target of from here to here. because the technical target of an SFP is the most recent valid pullback, and that's not until way down here. But I'd be looking at areas of interest like this point of control and seeing how we like had a strong induced bounce as potential barriers to that target. To watch this like a hawk, right? I'm just gonna go straight down to it. 2 minutes and 50 seconds left on the candle. Here it goes. Losing momentum. If the candle closes below the line, we have price acceptance below the momentum. Can we take another look at XRP? No, am I taking it? No, I wasn't. I wasn't taking that. The R&R isn't there, unfortunately. And some people might have taken it, but it's cool. Even if you don't take the trade, it's kind of cool to be able to like narrate what's happening and why it's happening. Kyle, do you think Zcash is going to reject at 274? Oh, we can take a peek at that. I know that request was asked first. Hello from Germany. Do you have a scalp entry for me? Kyle, notice you got market structure indicator on your RSI by mistake or secret weapon. That, my friend, is a mistake. However, you can look at these line graphs as if its own unique structure, right? When a key level breaks, you're looking at, rather than a price feed, you're looking at your RSI levels between like 0 and 100, right? And so if you break above, let's say for example we break like the 70 level while seeing like a double top on the RSI, and especially if it comes with like bearish divergence, that break below the 70 level is actually a significant level to watch, and then you'd watch the 60 as support and the 50 as support. The primary levels in the RSI that most people watch are the 30 low, the 40 mid, the 50 mid, the 60 mid, and the 70 high. And the 20 and 80 are extreme levels. Wait, that was an accident. I could try to... Yeah, I just deleted it. There we go. Aggressive push down. It's all relative to the 5-minute time frame, so the candles look bigger than they are. AWS servers have crashed in the United States. Yeah, a lot of people are feeling it. That does impact some cryptocurrencies that use AWS for their support. Luckily, none of my stuff are... I guess Teachpool is impacted by it, but we already adapted. Okay, let's look at Zcash. We basically hit this target. If we hit the technical target, which is here, then the R&R is worth it, but I'm just worried about this spot. All right, cool, that's hit. All right, and then the technical is next. See, if I didn't fear this is where like sometimes analysis can actually keep you out of trades. Where if you fear a certain level causing a problem, it could keep you out of trades that end up hitting your risk-reward ratio needs, right? Or risk-reward ratio requirements. Okay, we're at the target now. Well, the technical target. There, I would be, yeah. You can either close now or you can take a partial. The reason why you might want to just take a partial is because if we break this low, we have a double top. And that could induce a continuation. We have demand right here on the 5. It is just 5-minute demand off of the previous value low. So we have that confluence that could cause us to bounce, then hit this area and gives that continuation. So that's the kind of behavior that I would expect if we broke this neckline. is that, change character, bounce with demand, retest, lower low. But no matter what, I'm expecting a bounce here. Congrats to anyone who may have taken this. As a 1 to 3.66 for where we currently are, and to the technical target is a 2.87. So if you risk to lose $100, you would have gained 287. If you got out at the neckline, you got to get $352. Assuming you're doing your risk management properly and all right, cool. Well, that was fun. Too bad I didn't take it. Okay, Zcash was a request. My bad. Let's get on to that. We don't have a Zcash chart, I guess. ZEC is Zcash, right? Yeah, okay, we're good. Kyle, can this be considered a double top formation in the 1 hour time frame with 107,800 target? This here, the technical target would be $109,508, 510. That's the measurable target right here. And that comes in confluence with their area of interest here with the 6 hour order block. We expect spot rebuys from a double top target. But yeah, you can consider this a double top for sure. But that target that you're suggesting is a little low. You could target down there because we have like fair value gaps and stuff like that in our, but we have to watch the previous highs here that could be tapped as a potential barrier with the confluence of the measurable target being there too. Normally when measurable targets are hit, we have a spot reaction that induces a short-term reversal. But yeah, if we get acceptance into here, then I'll be watching here next, then here next. Okay, next, Zcash, right? Go into Zcash. We looked at Zcash for a short. I closed it too soon. I saw opposing confluences that induced me to get out. We ended up hitting our target for a 6 to 1.49 risk to reward ratio. Basically what we saw last time we were on this setup, which was during a live, I believe. Yeah, we had the short, lost the momentum at that value area high. Basically all my core rules were met. Like for my strategy, like the clairvoyant strategy, basically the rules are basically when we get to a value area high or a value area low, we break momentum, get a change of character, you jump into the trade and you target the opposite side of the value area. So this one was a little bit awkward because we hit the value area high but we had a high side POC and double distribution. So we expected the move to be relatively quick. And it became quick once we got into this volume gap here, right? But at first, the volume shelf acted as support and gave us an opposing, like a bounce against us, and then started to come down low. I was in 2 trades at the time, and one worked out perfectly, and this one I closed too soon. Still made money, but not the amount of money that I could have made. Here we got acceptance into the previous value area recently, and now we're kind of back at the same spot where we had our short. So we can delete this level right here. We don't need that anymore. The previous value low. We got our previous point of control, which we're approaching right now. Oh, Wagner long from the bottom of the wick. Good job, man. Value area high. There we go. We got that kind of curved structure here. Get momentum picking up the pace. So we got our internal momentum here, our broad momentum here, suggesting the pace of the buyers are speeding up. And it likely came as a result of acceptance into this value area, right? We got this kind of like ascending double bottom kind of posture with the neckline being at the value area low. We broke out, retested, got the higher high. Then we started seeing the pace of buyers speed up as we rotate towards the point of control. So this is an area of concern that I'll watch out for, but preferably we take the liquidity from Zcash's high here and get like an opposing reaction from there. Either it be an SFP while testing that value area high again, or a bearish change of character. Either way, this is an area of interest you would watch out for shorts. We're fighting the point of control right now. That could induce a reversal, but I would prefer to take the short here around 177.97. So SFP opportunity. Oops, my bad. I hate it when I do that. Or bearish change of character here. Oh my God, man. There we go. But we don't have like a level that, at least on the 15-minute time frame, we don't have like a proper level that we could wait to break just yet until we get the higher high. Because right now it's way down here. So we kind of got this awkward little regression trend here. No proper pullback. You need to have 2 consecutive candles being red, guys, for it to be a proper pullback. And we got that right here. So if we get the higher high, this will generate as a strong low, evolving from here to here. And then we can have that as our key level for potential shorts if that level breaks with a full body candle close. So I would prefer we continue to go up and then prepare for shorts here, but it's not up to us. When we shorted off here before the past, we can prepare for something like that again. So this is the other pathing scenario. Hit our head here, then break this low here. But yeah, for Zcash, to better answer your question on that, I would be looking for resistance here. Expect resistance here too, and prepare for it to potentially reverse back down to the value area low. Okay, Teo, XRP. We'll look at XRP next. We have an XRP chart. Last time we looked at XRP was 5 days ago. We were looking for an SFP here. Last time we were here, it looks like we got that scenario played out. Let's see how the trade would have done though. So if we took the SFP, you would have gotten. So this was the first SFP candle was right here for this doji reaction. If you took that, you would have been knocked out. But remember when I was talking to you before about using Fibonacci to give you a 50% deviation? If you grab from the wick to the body, it would have suggested protection against this liquidity sweep. You would put your stop loss there instead of right at the invalidation point, and this is the technical target. You would have been really close to the technical target before likely get knocked out here if you exit around this moment. If you're seeing it pull back and like fail again, that probably would have taken some off the table either way. The second SFP did well, but the R&R was poor. Like we broke that high, got through the supply, and then came down from there. So let's see. And then we were looking at these previous lows, anticipating that we could find support at them or at least beneath them. And we got, looks like we got like a kind of like an inverse head and shoulders kind of posture. Broke that to the upside, retested, and now we're climbing back up. In confluence with that kind of like inverse head and shoulders posture, we had a break of downtrending momentum. If we zoom out on XRP, like we're dancing between a previous valley area right here. So we got out of this valley area that we're ranging above this macro valley area here. This macro valley area was basically solidifying support above like the previous all-time highs for about 220 days, which is insanely healthy. You want stuff like that to occur in order for the asset to be able to expect to go and create new all-time highs, which is what happened, right? We got that squeeze event. We broke it before the apex right here between this uptrending momentum, this downtrending momentum, and we did well and we took all liquidity from these highs, but that was kind of the end of it. But now we have this new valley area here, so if we do get acceptance back inside, we can use it as a tool to help us give us guidance into targets, like a rotation to the valley area high at $3.13, for example. We're kind of building this descending double bottom. It's technically ascending because of this wick, but body structure wise, if we ignored that wild wick that just wiped everybody out, the body structure has got this descending double bottom posture. We've stacked decent liquidity above these highs from this regression trend, so we're kind of like on our way to take it out, and it could allow us to break this neckline and give us a decent double bottom posture to then get a move back inside this valley area right here. The valley area low comes with the confluence of a supply concern here, so just be cautious of resistance. If we do come up here, I'll be watching out. We could hit our head off of that. When we have a decent amount of time outside of a valley area, you got to treat the valley area as a barrier. But yeah, locally, I expect this thing to rotate eventually to the top here. If we zoom in on like the 4 hour, we can see what kind of posture we have. Yeah, the 15 minute, we're in the supply zone. This is our next little barrier concern. We have liquidity above this wick high and above here. So if we mitigate this supply concern, then it's the highs that you're going to watch next. You can watch for a potential legacy SFP from that high. But right now we're fighting against the supply. We get our momentum. We can draw it really quick. So the pace of the buyers right here. So you check the order books to see if there's limit buy walls preparing to buy here. If there's a large buy walls chasing this trend line, then you know it's likely going to be honored and induce a bounce back up. We haven't confirmed a full body candle close below this low, and because of this wick, it's actually healthier for you to wait for a full body candle close below the wick now, especially if it confirms as an SF or the sweep, which is going to be about 2 seconds, 1 second, 0. Okay, it just confirmed close, so now technically you want to have a body close below here, and that'll be good anyways for the kind of like waiting for the confluence of a close below the VWAP, align with that, and then I would expect a rotation down to at least this high for a retest and confluence with the uptrending momentum and the previous point of control. So that could be a good spot to prepare for a potential short-term long as we go to try to take this unclaimed high. There we go. Let's see. TA on Tesla. I haven't done TA in Tesla in I don't know how long. How's their earnings? The one thing that gets me bullish on Tesla is that package offer from Tesla to Elon Musk, giving him these crazy 10-year goals that, if accomplished, mathematically would 8x the valuation of Tesla. If you want to make a bet on someone, like we can bet on someone like Elon Musk as a decent bet for like a long-term hold. Who here thinks that he could accomplish something like that? Like it was like selling, I think I don't know how many units of their Optimus Prime bots, Optimus Prime. There's a lot to it than just that. There's a whole bunch of goals he needs to accomplish, and if he accomplishes it, mathematically it would 8x the valuation of Tesla, but he would be given a package that would basically turn him into a trillionaire. It's wild. Yeah, you think so? Yeah. Not many people like Elon Musk, but that guy's a machine. Key area of interest here. That's a long way down, though. It would require it to like lose 75% of its active market cap. Demand zone here is required to lose like 2x of its active market cap. Demand zone here, 25%, 20%, sorry. It is a volatile asset, but that's a big ask. Coming down, got local support. Now, right now, we don't have the full story about what it's doing on the daily here. We are obviously seeing resistance as it's fighting against its previous, like basically its previous all-time highs. Lots of interest for sellers to induce reversals. The last time we were here, we had this two descending double tops. It fractalized double tops. So we had an internal one here, and then we had a more macro one here. And when you see that kind of fractalization, it's a warning sign of people exiting, or a lot of people agreeing with the idea of this coming down. So if we see something like this again, where we already got like the pullback, right? So if we come up and create that neckline, then we got to be fearful of potential double top inducing us to come back down. If we do come back down, this could be a good buy opportunity around here, or at least to see if it will come up all the way down to the uptrending momentum. Or because we don't have the full picture yet, we could also build a pennant here, like a continuation structure that induces liquidity above the local downtrending momentum to allow it to pump up further up. And usually it meets with the same momentum that it led into. So if you look at the mast of a potential pennant, you grab from a trend line from the high to the last point of consolidation, and then you have your mast. And then from the last point where we had a retest from a breakout of a pennant, you'll get yourself the technical target. So if we do consolidate and squeeze here and build a pennant, you can expect a target around $566. While being super mindful of this high here that might have liquidity resting above it that could also be used as an exit plan by market makers that could induce a reversal. Let's see. So SFP wick level here to watch out for. But yeah, here we don't have the full story yet. Whether it be a double top or it be consolidation for a potential pennant and continuation. But we don't have the market structure that we need. We have an unclaimed high, which tells the story by itself that we're more likely to go up, and we have a strong low, and it tells us the story that we're less likely to break this. But if we start seeing some resistance, it kind of like warns us that the strong low might be under attack, especially if you have the confluence of the 50-day EMA being broken simultaneously, which would likely take a few days for this to catch up, right, to that neckline. So you can have that confluence of the 50-day being broken as well. We'll see what happens. I'm going to leave this here just to remind me next time we look at it, but yeah, we don't have the full story yet on the daily. On the hourly, we have, it's kind of telling us that we're coming up to take that unclaimed high. We broke the downtrending momentum. We kind of got this inverse head and shoulders kind of posture. And, we created an hourly order block telling us that there could be institutional involvement with this most recent pump. And there could be residual buy orders there that could induce a pump if we come back down to test that area and fill those orders and then start coming after this high. Okay, so that's Tesla. You haven't done stock TA in a while, so stock TA, when it comes to earnings, if you can predict their earnings, that's the key for really good swing trades. If you get earnings reports and you just know, like Nvidia was very easy to tell for a while where it was going to go. Predicted its moves like 3 months ahead of time. On this day, we're going to pump. You know what I mean? Like, it's just nuts. It makes you feel like a wizard sometimes. Go back to the 5 for Bitcoin. We have... Okay, went through a lot of assets. Litecoin, XRP, Zcash, AVAX, Render, HBAR, Bitcoin, Tesla, a couple oddities. And see CRO, see how CRO is doing. And then we can look at Link, Teo. Okay, CRO, I think we have a chart for CRO. I'll double check. We do not. CRO. Go on OKX for it. Okay, so we were looking at a bullish move last time. It doesn't look like even confirmed. Yeah, CRO wick down to its, like, it's stupid. Like, you expect the rotation down to here with a broadening wedge. And I think there's only a handful of assets that actually predicted the crash that we had properly with this technical analysis. And the ones I'm aware of are Bitcoin and now CRO. Like CRO being in this broadening wedge, the volume amplifies, right? Another like common name for this is like the Amplifoam pattern or whatever, but in history we've always called like a ascending broadening wedge. And that's where like the volume is like low because the confidence is kind of low, but then the confidence kind of builds in traders and then just keeps getting more and more wild. But this is so macro, it's insane. It's been in this structure for 1,080 days, and we hit the top of it, and we managed to hit the support. So up here, this is where you prepare for that short all the way down to here, if you're trading inside the internal structure. And Bitcoin predicted that crash through a daily SFP, right? It was, but I struggled believing that target, even though the TA said we're going down. So have you ever heard the saying, like, trust your TA? Just fucking trust your TA. But yeah, we had that inverse head and shoulders posture, kind of a bit of a cup and handle too, but we never broke or closed above the key level to have those buyers help induce the move up. Because when retail sees something like that, they usually go, they kind of ape into it. But let's clean up this chart a bit. So we have, delete this. Delete this is for SFPs. We got that double bottom target hit on that scenario. Let's undo that move, that previous value high. We'll grab this and we will sync it alongside that daily order block right here. We have the body structure is showing us like this descending double bottom. Right now we're fighting against the 200-day EMA. If we get above that, we're likely going to come to the neckline. If we break the neckline, I'll be looking at a conservative target, maybe likely just coming up to hitting the supply and preparing for the reversal there. Let's zoom in on the lower time frame structure because right now we're looking at the daily. And we're starting to see that horizontal resistance against the 200-day EMA alongside the supply confluence we got built right here, right? So we got that impulse move down, consolidated, impulse move down. This is a form of supply, just like this here. right? Whenever we see these, the opposite version is demand. Impulse move up, pump, demand. So when we come up back down here, we can see that we could use that for long confluence. Now we can use this for short confluence. And we can see that the confluence that we're getting right now is we're actually getting the structural evidence of resistance through the double top posture. We just need to have a full body candle close below the neckline to trust it. Otherwise, we could consolidate for a continuation up. Send this to back. Got a little demand here. Pretty steep. Just like, here we go. Got a previous Valerie high. Got a demand zone here. So we're getting kind of squeezed between this demand and this supply. This could induce a range for us to ping pong around a bit. But right here, yeah, I can prepare for potential longs. Prepare here for, well, we're already kind of getting the structure for the shorts here. So we just need to have the close below this. If not, if we dip and close above this, we could still fail after getting above this area. And then it would have the close below the 200-day EMA and likely with giving us like structural confluence of maybe a double top in this area for a short. So if we don't get here, this is a good spot to prepare right here too. But if we get the break structure and higher high above the supply, I'll be looking around here for our next targets right here. Liquidity above these highs. We got hourly order block as a good level right here. Mark our low for an SFP. I'd like to see like a decent measurable target that could maybe give us a hit on all this liquidity here. This is a decent liquidity curve on Chronos. Get your curve trend line. Get as many touch points as you can. But this is the suggestive momentum right now of this. This is called a parabolic curve. So if you want to research parabolic curves, they are great for preparing for shorts. Okay, as the pace speeds up, and then eventually you hit a key area of interest, you lose the momentum, but you're using market structure as your most important indicator for a short on a loss of momentum on a curve trend line, because curve trend lines have 3 anchors, so it's very easy to move this around in your favor. So just be aware that, yeah, market structure and confluence with supply, maybe a value area high is really, really important to have alongside that. I've only ever traded 2 of these before in my entire career, but both of them were wild, like crazy amount of volatility and just capturing all that liquidity right down to the technical target of the parabolic curve, which is right here. But yeah, otherwise, preparing for longs here. We might have evidence of a short here, but I wouldn't be taking the short because of the barrier right in my face. I would definitely be taking it if we got up here and confluence the loss of this momentum, though. The R&R would be good to our primary threat, which is right here. If we breach past that threat, then awesome. Then we can get our target extension down to here. Okay, guys. I've got to head out. I'm working on something really cool for you guys. It's going to take me about a week to finish it. And then it'll be a forever project of improvement after that. But once it's done, I'm really excited to show you guys. Congrats to anyone who might have taken the SFP during this call or during this live. It was a bit of a brave one for me, so I didn't take it just because I was worried about this point control barrier and the buy side reaction that we saw here. But we managed hitting the technical target, so congrats to anyone who took it. I appreciate the $2 tip, man. Bitch Boy. Thanks, man. What do I think of quantum stocks? You mean with stuff with quantum involvement? Yeah, assuming what you mean by that, you're talking about like Microsoft and stuff like that, right? I always agree with trying to envision how certain things are going to impact the future and what kind of assets you should be getting involved in based on that future. For example, like AI. If you invest in companies that are assisting in the data center development, I promise you, you are doing really well right now with your investment. So that's what I would consider when it comes to quantum stocks. It's not just like the companies that are involved in building any kind of quantum technologies, but anything that could be assisting them in that build are good investments as well. Yeah, because sometimes Google, Microsoft, they're great investments, of course, but they're not ones that are usually going to make you rich at the state that they're in right now with their market cap. But you could, climb your way to wealth by capturing proper lows and exiting at proper highs, alongside that narrative. All right, cool guys. Have yourself an amazing day. My next live is on Wednesday at 11 a.m. And then I have another one on Friday. And on Friday, we're doing another giveaway. I'm going to see if I can potentially increase the account size for you guys. I'm giving away $6,000 accounts, but I'm going to cross my fingers to see if I can get you guys like $30,000 accounts for the reward on Fridays. So I'll see you guys on Wednesday, and I'll see you guys in the community. Reach out to me in the community if you guys need help with anything with your trading, any small question. No question is a dumb question. We've all started learning what a limit order is, learning what a market order is. There's no such thing as dumb question in trading because it's not common sense. Nothing you're learning here is common sense. Okay? So have a great day, guys.